with Nigeria's interest rate at 24.75%, experts believe the environment may limit the level of investments needed in the agricultural sector. Meanwhile, the government says it expects about $99 million from the Japanese government to enhance food security in the country. Kola Masha CEO Babban Gona joins me for this discussion. Kola, thank you for joining us today.
My pleasure. How are you today?
I'm very well, thank you. Let's get right to it. It's the end of another quarter for Nigeria's agri-sector. Are there any highlights that you can point to that perhaps shaped or impacted the sector in any way?
Well, I think so. What we've seen over the last quarter, I think, is in an effort to help to curb some of the rising food inflation. I think the government has enabled several companies to import some food into the market. Particularly, you've seen quite large volumes of maize being imported into the market. Now, I think this is a short-term step, which hopefully will, which we have seen kind of stabilize some of the current rising prices that we've seen in the commodity markets. However, I think in the long term, really at the end of the day, these types of measures will not really have the impact on jobs and the economy that the government will be looking for, and really need to address some of the root cause challenges of trying to help farmers increase productivity by getting them access to the credit and loans that they need to buy the products.
We'll talk more about farmers and productivity in a second. I wanted to just quickly get your thoughts on the interest rates levels in the country right now. As you know, the MPC a few days ago raised a key benchmark rate to over 24%. How is this expected to impact on the farmers? We're already in a high interest rate environment, and it's just gotten higher now.
Well, I think, it is definitely going to make it more difficult, I think, to access financing. The reality, though, is right now the agriculture sector is hands down probably the least has the least access to formal bank finance today. I think most of the data shows it's maybe about 3 to 5% of commercial debt lending goes to agriculture, and most of that is really at the end of the day going to processors. When the food value chain as a whole is close to 40% of GDP, so it's significantly underfinanced. So it is going to have an impact. But I think the reality is the sector is so underfinanced already. The impact might be minimal.
Well, speaking about support, not too long ago, the CBN donated 2 million bags of fertilizers to farmers, valued at 100 billion through the Ministry of Agriculture. And some of the comments, just remembering some of the comments that the CBN governor made at that time, he did say that the CBN is looking to strengthen its collaboration with the Ministry of Agriculture to mitigate especially the surge in prices. Of course, we do know that the food inflation is a crucial component of the inflation levels that the CBN is currently fighting. So I guess maybe along those lines, CBN felt the need to intervene on that level and strengthen its partnership with the Ministry of Agriculture. But what do you make of all of that?
Well, I think, I appreciate the efforts of government to try to tackle these problems. But I sense from a lot of the policy direction that's coming out of this administration that it's a very big government approach, where government is trying to directly intervene and support in certain ways. I think the reality is that Nigeria has seen this many times before. I think the reality is that it's generally best when the government enables the private sector to actually execute, versus a lot of the efforts where they actually stepping in and crowding out the private sector, which will inhibit further investment. So I think I think there are potentially more effective ways to create value.
And it's quite interesting for a sector that the government relies a lot on in terms of labor, and we know it's labor intensive. And especially looking at the previous government, that was where a lot of the policies were anchored in terms of creating jobs and boosting food supply in the country. But yet, like you said, 3% or less goes to this sector and primarily goes to the processors. So where does that leave the farmers? Are there maybe at a micro level, maybe is it micro banks, a bank of industry, agriculture bank, that meets the financing needs of these farmers? Because if we're going to grow the sector, to significantly turn it into a mechanized system of farming, etc., what we see many governors, preaching in terms of how they intend to grow the sector. One it's hard to picture how that growth is going to happen when there is no financing.
Well, I think unfortunately the vast majority of farmers have to rely on really informal lenders that often charge really loan shark type interest rates. I think there are very effective models out there in the world that have demonstrated to be able to finance smallholder farmers, particularly in Africa. The best example that we know is the Community Agricultural Finance Institution model, or the CAFI model. And I think the reality is, once again, if the government can enable the private sector these types of models, I think you will find that you'll have much more sustainable impact. The needs are huge, and it's an $80 billion financing gap in agricultural production alone in Nigeria. So it's a huge opportunity that really is not being capitalized on.
Right. I wanted to ask, let's talk about Babban Gona. What have you been up to lately? What are you looking to do this year? I know you work on the ground with farmers. Bring us up to speed on what you're doing.
Well, I think from our perspective, we're very focused on enabling smallholder farmers to become richer. We do that primarily as a technology platform that enables individuals at the grassroots level to really become these community agricultural finance institutions and enable them to manage these small portfolios of typically about 100 farmers each. And through those micro institutions, we've been able to deploy, I think, cumulatively about $200 million in financing to smallholder farmers with a 99% repayment rate. And so for us, I think the goal is really to scale that model out to support not just in Nigeria, but across the region, about 15 million farmers by 2043.
It's interesting you have a 99% repayment rate, because that takes my mind to the Anchor Borrowers Program, where the CBN ran into issues with in the repayment, very, very low repayment rates. How is yours working? What is the model? Why is it working, basically?
Well, I think it begins by really understanding the key risks of lending smallholder farmers, which stems from willful default, diversion of funds, low productivity, and commodity price risk. And then what we've done is basically take each of those risks and developed a mechanism we call our 10 levels of risk mitigation that address each and every one of those in a very sophisticated way, using a lot of technology, using building out a network of trusted farmers within the communities that actually have that social capital to be able to identify good farmers and maybe not so good farmers you might want to lend to.
Well, thank you so much for sharing that with us. Another great example of, when the private sector does lead some initiatives, we do see a difference. Thank you so much, Kola, for sharing that with us. That was Kola Masha, CEO of Babban Gona.